In the 1990s, he created a billion-dollar copper producer. In the 2000s, he launched what would become one of the world's top primary silver producers. And in 2015, he started what he believes will be his third billion-dollar company. This is the one gold stock to research right now. Visit futuremoneytrends.com/investright. Greetings and thank you for joining us at futuremoneytrends.com. I have a special guest today, one of the top gold experts that I know in the world. He tracks manipulation like you wouldn't believe. Just an incredible analysis. You can easily get access to all of his information at his website at tfmetallsreport.com. You can subscribe for just $10 a month, and you'll be getting essentially what is the best information and analysis on gold and silver and a lot of other things in the macroeconomic environment. Our guest today, Craig Hemke of TF Metals Report. Craig, thank you so much for joining us.
Hey, Dan, thank you so much for the kind words. I really appreciate it.
Hey, sir, we are seeing fireworks in the precious metals market, both with gold and silver. Let's just put it out there like that. What are your thoughts right now? What's going on? Is this whole thing just rupturing? Silver has quickly gone into the $20 space. I mean, literally, I bought American Eagles, I think, like not even a week ago, and I think I still paid under $20 for, and that was, the spot price plus $2 or whatever. Is this just completely unraveling here now, and we're just off to the races?
Isn't it fun, Dan? I did the same thing. I bought a 1 kilogram silver bar, I don't know, last Wednesday. And by the time I picked it up at the post office yesterday, even with premium and shipping costs, everything else, I was up. Yeah, it's fun. And for everybody out there, if they've been doing what we've been talking about since 2012, recognizing that this is just a paper scam, that the paper derivative price does not reflect at all the actual value of your physical gold and silver. If you've recognized that, taken our advice to be not selling and panicking, but to instead be adding to your stack all the way down, just like the Chinese and the Russians have continually been converting their paper dollar reserves into gold and silver. That's what everyone else should have been doing. And if you're like me, you're now up on the entire stack that you own, both gold and silver. And we got a long ways to go from here. You asked me what's driving it. It is, boy, we could talk about this for hours. There are so many different factors that are driving even the paper price higher. Recall that the price is still set on these paper derivative futures exchanges, and so you've got to have more paper derivative buyers than sellers to get the price to go up. What drives the paper buying are two key factors. What is a rapidly rising yen, or expressed inversely, a rapidly falling dollar yen. That's the symbol that most everybody follows. Mm-hmm. But also, even more important, rapidly falling global interest rates. The U.S. long bond overnight last night got all the way to 2.1% for a 30-year U.S. bond. That is hands down a new record. The 10-year note is at new record lows. All around the world, we're seeing the German 10-year Bund move into deeply negative territory. French bonds, Japanese bonds, these negative interest rates around the world totally eliminate one of the classic arguments against holding physical gold, and that is it doesn't pay a dividend. Well, when they're charging you money to either buy a government bond or hold cash in a bank, why the hell would you own gold when it's already up 30% year to date? And that's what we're seeing. We're seeing this kind of perpetuate itself in a virtuous cycle. Asset managers around the world, not just hedge funds, but pension funds and other big, massive pools of money at say, insurance companies are looking at gold and going, why wouldn't I own that? And now with the start of the second half of the year upon us, these asset managers are seeing these returns in gold and even in the mining sector and going, I got to get on this train. And we're seeing another surge here this week. It's really, folks might be thinking, I don't want to play along. I'm waiting for a pullback. Those folks have been saying that now for 3 or 4 months and continually get left behind. Now's the time that the bull market has resumed and people need to take advantage of it.
Certainly. And the mining shares have gone absolutely ballistic here. It almost makes it, I guess, impossible or very difficult to get into these things right now because, my goodness, I mean, now I think the last time we talked was a month ago. We were talking about how some of them were up 200%. I mean, some of them are now crossing 500% gains. This is insane. The mining sectors, is this exactly what you expected to happen?
Absolutely. We watched the Hui index come down. I'm very fortunate with hindsight, as I wrote something back in January of 2013 with the Hui index at 450 and said, why would you even want to own these things when you could own physical metal? And we watched that index go all the way down to 100. So it got trimmed by 75% from there. But it based at 100 or 105. And I actually started dabbling in the miners myself last fall. And I've been very fortunate to have ridden along. That index now is up to about 270, and it's very easy to think, well, gosh, that's a 170% move in 6-7 months. But I want to remind everybody, the last time gold and silver were making highs in 2011, that index was about 650. So if you think gold and silver are moving higher on just some real basic physical and fundamental and technical bullish factors, the miner's going to keep going too. If you're not in now, you got to be kind of a little more picky than you needed to be 6 months ago. But really, the best strategy is what your stockbroker or your financial planner has always told you. Just start to average in. Buy a few shares this week, buy a few more shares in a couple of weeks, buy a few more shares after that. If we're right, and if all of these shares are going to new highs, certainly as evidenced by these indices like the GDX, GDXJ, the closed-end fund, or maybe the HUI, then it's not too late. And people need to realize that there's plenty of opportunity left.
What inning are we in? So, because I know a lot of people probably are concerned that they've missed out. What if you had to put it in baseball terms? What inning are we in for the bull market in precious metals?
Well, if November, December was the exchange of the lineup cards at home plate, then we are somewhere. The starters are still in, Dan. We're probably somewhere in the second, maybe, at this point, from a traditional sense. But I got to tell you, these paper markets that are somehow allowed to determine price, they price metal as if it is abundant. Thus, this extreme gold-silver ratio, thus silver still at only $20, when what's abundant is the paper derivative itself, the supply of which is managed by the banks that make markets on the COMEX. The actual physical metal that backs those contracts is scarce. We've been in a 4 or 5 year period now of silver supply deficits. The amount of levered paper derivatives against physical gold is, I don't know, nobody really even knows. I mean, we've got, the physical gold that's out there that I own, that you own, that everybody listening probably owns. But we've got unallocated accounts worldwide. We've got paper derivatives. Somehow people actually think the GLD has added an actual 340 metric tons of gold this year. They might have added 340 metric tons of paper obligations of some bank to actually deliver at some point in the future. But all of these unallocated paper pieces of gold that are based upon a dwindling supply of available physical metal, this system is this paper derivative pricing scheme is headed toward collapse. Now, it may not collapse next week or next month, but at some point there's going to be a delivery failure. The confidence scheme of all of this of, you can always get your gold. Don't worry about it. It's in an unallocated account, but anytime you ever want it, we got it for you. The first time somebody shows up and wants it and they're told, give us, 90 days. Then the whole thing begins to unravel. So more important than just looking at it in a traditional sense of, we're in a second inning of a 9-inning game. We could very well be in the closer could be coming on. I mean, we could be in the 9th inning, given the fact that all it's going to take is one or a series of a handful of delivery failures, and the whole house of cards is going to tumble. And then, the game in terms of can you get in will be over.
Last question. BREXIT came right off the heels of the Fed kicking the can again. Currencies, like you said, the currency war is accelerating at this point in 2016. The U.S. Treasury, as you noted, just hit a fresh record low yesterday. Just this entire environment, does it look like the retail, not just the big banks and the hedge funds, but from what you're reading and what you're seeing, does it look like the retail is about to flood into this market as well? Because I talked to Andy Hoffman, a mutual friend of ours, a few weeks ago, and he was saying at Miles Franklin, the vast majority of buyers, or at least the dollar volume, was still coming from a handful of people. It wasn't phones ringing off the hook with retail. From what you're seeing worldwide, even, does it look like it's the setup for 2016 where retail comes flooding into this market?
In the U.S., it's probably still going to take a while because a lot of the retail buyers are the same folks that were buying 4 and 5, 6 years ago. So it may take a while for them to have their faith restored and want to buy more, outside of the folks like you and I, the dyed-in-the-wool veterans that have been buying all along. But more significantly is globally. I mean, we're talking this Brexit thing and now the 7 or 8 different EU countries that want to have similar referenda. This Brexit thing was a fatal wound for the world's second largest and second most popular fiat currency. So if your savings are all in euro and you're looking at the potential dissolution of the euro, you'd be a fool not to be buying physical gold and physical silver. And that's what we're seeing. And again, I cannot stress enough, it is that removal of the physical backing of the paper system that will cause the paper system to collapse. And when it does, and when actual price discovery is going to have to be made based on the exchange of physical metal, the price is not going to be $1,370 an ounce for gold, nor will it be $20 an ounce for silver. It's going to be, just a little bit higher.
All right. TFMetalsReport.com. Everybody, you can get daily commentary there. However, I strongly suggest you for the ridiculously low price of $10. That's like his worst bottom of the barrel bear market price. And here we are in a raging bull market. So we're certainly grateful that you have not raised that price. I don't know if you will in the future, but certainly everybody for $10. I mean, seriously, if you don't want to do it or you can't afford it, email me and I'll do it for you. It's too good not to have this type of commentary on a daily basis for $10 for the full month. Craig, again, thank you so much for your time.
Dan, if I might add, I actually did have to raise price to $12 a month because the site is 5 years old and we are redesigning it and upgrading all the software over the back half of this year, and I got to pay for that.
Well, that's okay. That's gold adjusted. Gold's up 25, 30%. So
that's true. And a lot of people have told me, for what other newsletter writers get $100 a month, how can I still? Because the reason I only charge 12 is this is not about making money. This is not about enriching myself. We're trying to warn and get people to act and educate as many folks as possible before all this happens. And if we go, if I were to start charging $50 a month, how many people would be priced out? So I appreciate the kind words. We got to keep it the cost to keep the lights on as low as possible, and that's why we do it.
Check it out, everybody. $12 a month. You can't beat it. All right, Craig, thank you so much for your time, sir. You have a great week.
Dan, thanks. Always great to talk.